Hello, my fellow investors, and welcome to your informative, entertaining distraction of the day. This is your host, Strategic Investor Al, and I would like to take the time to welcome you to my channel. Now, if you haven't subscribed, don't worry, this is the perfect time to do so. All right? Just so you know, your support motivates me to keep creating and sharing content, as well as engage with all of you. All right. So as always, I hope that you're all having a fantastic and productive week while prioritizing your well-being and your loved ones. Quick disclaimer, I have to do it. I have to say it. I do not provide financial or tax advice. All content shared here is purely for engagement and entertainment purposes. Please do your due diligence before investing in any kind of investment. Make sure that you understand the risk associated with them. Ba-la-la-la-la-la-la. You already know what's up, alright? Okay, so without further ado, let's dive into today's topic. How to strategically manage tax lots to your advantage and how to turn this powerful feature into a valuable tool in your investing arsenal. Okay, because trust me when I tell you, this little feature can actually work with you and can be very beneficial for you during tax time. All right, so to better harness this feature, we first need to understand what it does, and once again, how it can benefit us throughout our investing journey. And so let's go and get started with the basics. So what is tax lots? Okay, so it's basically a feature here in Robinhood, or some other brokers may also provide it, that allows you to sell your shares of a security in a specific lot. Okay, and these lots are based on how and when you originally purchased them. Okay, so since my focus is on Robinhood, I'll be explaining it from that perspective, and I'm going to provide you guys with visuals, for my visual learners out there. All right, so let's go break it down a little bit further. Each time that you buy a security, it creates an individual lot, okay? And that lot includes the number of shares, the purchase date, and what you paid for it. Okay, and this goes even when you do fractional shares, even when you're dripping, or even if you got assigned on cash secured puts. Okay, with options, if you get assigned, you're gonna get assigned 100 shares. So every time you get assigned on one specific contract, that's going to create a lot. All right. So let's go do a live so that we can better understand this and learn how to manage it, I guess. All right, so first thing we're gonna do, we're gonna hit trade. We are going to click on sell. We are going to locate the right hand corner where it says shares. You're gonna click on that, and we're going to locate sell in tax lots. Okay, we're gonna click on that, and the first thing I'm gonna take a look at is gonna be the order type. Okay, I'm gonna change this into market type. I just basically selected what kind of order I'm going to create for this lot. Okay, you can choose whether you want to sell at a specific limit price, which is the other option, and you can just let it go at whatever the market is offering in the moment. Okay, that is if the market is open, of course, right? Now, if you click on the question mark right over here, Robinhood gives you like a potential price range in which your tax lot might execute for. Okay, so right now the last sale, as you can see, was at $15.59, and the best bid is between $15.59 to $15.60. So there is a big possibility that if you do a market order, your lot is going to execute at either those two prices, okay, which is not too bad. Now, here's where it gets even better, okay? If we click on order type again, you can select limit, okay? Here you can set your own limit price at the level you wish to sell that lot for, okay? How good can I put it? This gives you the control over your gains or your losses, which of course can be very helpful for accounting purposes. Okay, assuming you keeping up with that. Hopefully you are, to avoid further surprises down the line. But it gives you that power. Okay, it gives you the power to set at what price you want to sell that whole entire lot that we are going to select. Okay, so for example, let's do 1650. All right, and the concept of this is basically just like setting up a limit order when you're about to buy a limit order at a specific price that you want to buy it. So here we go. I set that up for 1650. I'm going to click on select lots. Here is where it gets even better. Okay, you can actually select which tax lot you want to sell. Okay, and Robinhood makes it clear by showing the date. Okay, this is the date that you bought it at. The shares, your cost per share, which is basically your cost basis, the gain or loss at that lot if you decide to sell that specific lot, and how many shares are tied to that lot. Okay, so a good example, you see right here, 911, right? If I want to select that one, well, I would be selling 100 shares of Misty at 1643. Okay, now we must understand that this is not going to execute right away because we are waiting. It's just like a limit order. We are waiting for Misty's price to rise all the way to 1643 in order for this lot to get executed. Okay, so we're basically playing the market, and we're hoping that it's going to go in our favor so that it can actually go up and it would execute that lot for us at that gain or at that profit. Okay, now let's take a look here at the bottom. As you can see, the estimated credit, which is basically all the money that you would get back into your buying power once that lot executes. That's basically the credit that you're going to get for that whole entire lot. Okay, right next to it, you can see this is going to be your gain or your losses, and this is when I tell you that this can help you for accounting purposes, right? Because now you can actually select which one you want to do, and you can write it down in your ledger, right? You can write down or your spreadsheet, whatever it is that you're utilizing nowadays. You can, okay, I did tax lot at this date, and this was how much I profit from that lot, right? And then right next to it is the total shares. Okay, not too bad, not too complicated. It's very simple, to be honest. You might be asking, why is this so impressive, right? Because I think personally that this is awesome. This is impressive. And the reason why is because back in the day, before this feature was ever introduced, the brokers used to use only the FIFO system. Okay, what is that? Well, it means first in, first out. Okay, that meant that your oldest shares were always sold first. Like it or not, you had zero control of what the system was going to sell it for. Okay, but now you're basically in the driver's seat, and you get to decide whether you want to lock in profits or harvest a loss. Okay, once again, without this feature, Robinhood would have automatically selected the oldest lot. In this case, it would have been this last one right over here, the very first one that I got on January 31st, and that would have been 60 shares from that specific lot that would have been executed. Okay, so let's pretend that instead of me selling 100 shares of it, I wanted to sell just 50 of them at the market share price, and I don't utilize this feature here, where, well, Robinhood would have selected this, okay, this first lot, and you have no control over that. Okay, so 50 shares would have been coming from this lot at 27.65. Okay, that would have been a negative, a loss. You're basically selling the 50 shares at that price at a loss. Okay, and once again, you have no control. You wouldn't know that actually Robinhood is selecting that specific lot. It gives you more of an accuracy of how you want to sell your shares and how you can keep track in your ledger, right? All right. So here we go. Moving on. I want to shift gears into this letter right over here. I'm gonna unclick that. We're gonna go back all the way to the top, and I want to shift gears onto the letter S, what it stands for. This letter stands for short term, and it indicates the tax treatment your lot will receive once it's sold. Okay, so if you see an S, that means short term. If you see an L, that stands for long-term tax treatment. Okay, now before I go into this one, I want to do a quick disclaimer. I am not a CPA or a tax professional, so I strongly recommend consulting one. Tax laws change regularly, and these professionals, they keep themselves up to date on all the changes. They keep themselves informed and educated about all the changes that come in to the IRS or to the government regulations. Okay, me, I don't do that. I have no interest in doing that. Okay, so you have been warned. Seek professional advice. All right, that didn't sound right, but hey, you know what I'm talking about. But moving on, here's the breakdown. Short term, what it means. It means the gains or profits will be taxed as ordinary income. Okay, now ordinary income can range anywhere from 10% all the way to 37%, depending on your tax bracket. So the short term applies to assets you have held for less than a year. Okay, I hope you got that, because I mean, it's simple. If you held this lot, okay, this is a specific lot right over here. If you held it for less than a year and it has an S right next to it, it's going to get the short-term tax treatment. And that can be anywhere between 10% to 37%. I'm going to show you a chart with the brackets, okay? It's going to have single and joint. You got to take a look at that bracket so that way you understand how the tax code is broken down, all right? But before we do that, let me define what the long term is. Okay, long term means that you have held the lot for over a year. Okay, so let's pretend. Let's go to the very first one over here. If I had an L right next to the date, that would have been qualified for long-term tax code. Okay, so let's click on that. And what that means is basically it qualifies for long-term capital gains, okay? And the treatment that it's going to get is going to be as qualified income, all right? What does that mean? Well, the tax rate is going to range between 0% all the way to 20%. Again, it's going to depend on your income bracket, all right? So huge difference here. Short-term, 10% to 37%. Long-term, 0% to 20%. Okay? All right, so let's take a quick look at the tax bracket so that we can get a better idea of how everything is broken down. I'm going to take it right over here. We're going to hit continue and have more space here at the bottom. And as you can see, the more money you make, or as you can see, the more you earn, the more you pay. I'm going to leave it there for a little bit longer. And now I'm going to shift gears into, let's go for the long term, the tax treatment across the different income levels. Here it is. All right, so it's very important for you to keep these factors in mind, because this can give you the ability to plan a strategic exit that could benefit you in the long run, especially when it comes to tax time, right? At the end of the year, if you have made so much capital gains and you want to balance some of that capital gain so that way you don't have to pay so much taxes, and you have positions that you are losing on, you can utilize that tax lot and deduct some of those gains, right? All right, so all right, I hope that you found this video valuable. If you know of anybody else that can benefit from it, make sure that you share. If you have any questions, you can leave a comment down below. Like the video. And as usual, I hope that you're all having a fantastic day. And thank you so much for tuning in. Strategic Investor out, checking out. Take care.